Bit of a weakness on the screen and not entirely unanticipated considering we've made good moves. Good morning and welcome for tuning into the trade setup. I'm Needed Shah. The global news flow first. US home builder sentiment increases to almost 1 year high, which is good from that market's perspective. May have some impact on rates, if at all. Not the sentiment really, but the outcome of what this sentiment could actually lead to. Europe's too wet, too dry weather hampers the growth of agri products like grains and sugar crops. Big news, China's 5 year loan prime rate has been cut to 4.2% from 4.3%. Well, activity in metals to be anticipated. India and the US are close to settling 7 trade issues out of court as per Mint. And Akasa Air is in talks for a follow-on Boeing jet order. This follows the big deal from Indigo, which we'll talk about a bit later on. Remember, the SGX Nifty is indicating a start which could be about 0.4% in the red. So we'll start off lower. The question is, can we build on from there, or will we succumb to some bit of selling? But you got to bear in mind that the the the, the FI positioning as well is not looking all that strong. It's been a large sell number after a really long time, and that's the trade setup. So large cap indices, of course, saw some profit booking, serious profit booking, primarily driven by private banks in the session yesterday. So that's the key thing, right? That there was some bit of selling out there, and usually when banks or IT correct so significantly, you got to attribute it to the kind of positioning that FIs might be doing. Now, keep in mind that there was buying of 4,100 crores in index options. They sold calls, FI sold calls to the tune of 40,000, while at the same time they bought puts to the tune of 42,000. The net short is a significantly large number as well. So the positioning is certainly on the downside. Bear that in mind. Auto sector is being dragged by the two-wheeler stocks, and that continues to look weak. So while we may keep on thinking of whether the numbers will look good or not, the stocks are refusing to sustain at higher levels. Remember, yesterday I think we were talking about this trading recommendation from ICICI Securities on Hero MotoCorp, and well, Power Grid did not play up, but Hero MotoCorp and two-wheelers certainly are looking slightly wobbly. Real estate stocks too are taking a bit of a breather, but very unlikely that they'll suffer very large damage simply because the fundamental narrative of the kind of numbers that they're clocking in is positive, and that should definitely aid sentiment there. So, banks looking wobbly, autos looking wobbly, real estate by virtue of being in the rate sensitive pack, maybe just start have wobbled a little bit, but I think corrections to get bought into, and metals looking strong, especially after what China has done as well. Also, what is looking good is insurance, by the way. The last few days, insurance stocks have done really well. Look at the 5 day moves in HDFC Life or SBI Life. The price movement up 7.5% for HDFC Life, 3.2% for SBI Life, and significant long build up, 23%, 22% kind of long build up into some of these insurance names is a pretty positive thing from that perspective. Now, amidst this piece of weakness that we will have, the question is who will do uh, who will do what? So, stocks and what will they do? So, IFL Securities, SEBI's barred IFL Securities from onboarding any new clients for a period of 2 years. The SEBI order dating back to 2014, of course, an event that happened in 2014, says that IFL was mixing client funds with its own before using mixed funds for its own usage. Remember, this is not recent. This is uh, about 8, 9, 10 years ago, the issue that is being brought out on which the order is being given. And the company is in the process of preferring an appeal against the said order before the Securities Appellate Tribunal. Now, two, three things out here, viewers. Is this a recent development on IFL Securities part? No. Is this a past development to which, when I read the SEBI order, the order seemed to suggest that while IFL Securities was defending its position around what happened, SEBI thought that in the interest of it being a regulator, it has to pass a judgment which it thought was the pertinent one to do, and which is why this has happened. Now, two, three things here. It will obviously start off lower. There's no surprise there. I mean, it will start off in all probability on the lowest possible number that it can. The question only is uh, that will participants or current subscribers or current customers of IFL Securities want to move accounts elsewhere? Remains to be seen. Is this a negative news? Yes. Will this get contained very, very soon? Don't know. Will this get contained at some point of time lower down? Very well could. It is not a very expensive stock. Most of the brokerages are not very expensive of late. There a frenzy in 2020 and 21. That frenzy is completely died down. So these are not very expensive stocks. You've got to bear that in mind. And well, who knows if indeed Securities and Appellate Tribunal rules against the SEBI order as well. So that remains to be seen. But I would suspect that the sentiment is currently, for the time being, has weakened quite considerably. Watch out for the other group entities. Maybe there could be a bit of a collateral damage out there as well. No connection per se, but who knows? Interglobe Aviation, Indigo has placed that 500 aircraft deal at estimated $50 billion. The order will ensure steady stream of jets between 2030 and 2035. And by virtue of this, Indigo has beaten the Air India's historical order of with with this 500 aircraft deal that was 470 aircrafts. So quite stunning, really, as to what's happening in the aviation space. Some people would talk about alarm bells, but well, maybe it's a very, very high growth area. Akasa, I remember, as I said at the start, is also nearing a Boeing order. So pretty interesting what's happening in this space. Then two block deals. Timken India. Timken Singapore will sell about 8.4% stake in the company. Will offer 6.3 million shares at a floor price of 3,000 apiece, which represents a discount of up to 14% to yesterday's closing price. Now, is this will start off lower, also because Timken is not as liquid a stock as some of the others might be. So very, very likely that it'll start off lower and stay lower. So do watch out for Timken. HDFC AMC is the other one, wherein Aberdeen Investment Management will sell about 10.2% stake in the company, 2.17 crores in the price range of 1800 to 1892, which is a discount of about 4 to 9, up to 4.9% on Monday's closing price. This is the last of the stake sales. So the hangover goes over. If this deal is subscribed very well, all right, then you might well see HDFC AMC make a bit of a comeback in trade today itself. Who knows? So watch out for this one. Slightly different than what could happen to Timken. That's the point I'm trying to make. Then Aether Industries, current market price of closing price of 998. A QIP opened yesterday. Floor price at about 894. Watch out for this one. Canfin Homes, the board has approved raising about 1,000 crores via an equity issuance of some sort, and I think brokerages, the two notes that I read, were constructive on it, or constructive on Canfin Homes, excuse me. So do, because of this development as well. So do watch out for Canfin in the session today. Speaking of financials, there is a note from JP Morgan on Bank of Baroda. They have an overweight rating with a target price of 230. They say there's scope for further improvement in the key metrics, that the net slippages could remain negative, even in FY24, aided by low corporate stress. The ECL transition impact is easily manageable according to JPM. They believe that they have seen one of the highest, the bank has seen one of the highest EPS revisions in their coverage, and they think that there is room for more. Pre-FY15, according to JPM, the stock traded at an average multiple of price to book of 0.93 versus 0.8 right now, and they see some scope for upside, which is why the target of 230 versus current market price, or whatever, 195 or whatever the price is around. So there's some upside that they believe there. The other one is Moil, wherein a lot of smart money has gone and attended an investor meet. Systematics came out with a note on that. I thought I should bring it to you. The buy with the target price of 201 versus 219 earlier. They believe that the stock is likely to report the highest ever volume in Q1 FY24. The management is confident of sustaining this momentum throughout the year. Currently, Moil is amidst a multi-year capex cycle to raise its evacuation capacity to 2.5 MT of manganese ore by 2026 and a further 3.5 MT by 2030 from a current, I think, 1 or 1.1 million tons. So that's the key thing, significant expansion. And the math is that India's crude steel production capacity is estimated to almost double to 300 MT over the next decade, stipulating 11 million metric tons of manganese ore requirement, versus current 1.1 MT that MOIL has, and going up to only 3.5 MT. So if you thought 3.5 MT is very large, yes, it is large relative to the current standard, but very low compared to the kind of imports that India is doing of manganese ore. So do watch out for MOIL as well in the session today. Some other brokerage calls included JB Chemicals note on Jeffries with the target price of 2680. So do watch out for that. Have I missed out something? I'm sure I have. I'm just trying to see. So RVNL talks between Russia's CGSC Transholding and RVNL, which is the consortium that won the contract for manufacturing and maintenance of 100 and 120 Vande Bharat sleeper trains, have broken down. It's a big negative for RVNL. Very likely that RVNL will start off with a bit of a slam dunk today. So do watch out for that one as well. Am I missing out on something else? No, largely covered most things. Yeah, well, Anti has come out of the cement sector note. They talk about start of an upcycle. They've raised the target price on Ambuja to 550. They've raised the target price on Birla Corp to 1450. And they've raised the target price on Ultratech to 10,000 from 1,800. So do watch out for those names as well. So these are a few stocks, most certainly. Like I said, I mean, so watch out for Indigo, watch out for BOB, watch out for HDFC, AMC, Timken, and Coforge. Did an analyst meet. They have said that they will double revenues in 5 years. Maybe Coforge has some upsides today. To watch out for that one. Nevertheless, thanks so much for tuning into the trade setup. A little bit of an impact, a little bit of softness. Look at the FI positioning very closely and correlate it to what's happening to banks, IT, and some of the others, and you will probably get a picture and place your bets accordingly, if you will. Thank you for tuning into the trade setup. A clutch of conversations lined up during the course of the day. Gaurav Mehta, CEO of Alternatives at SBI Funds Management, on Talking Point at 10 a.m. today. And we try and talk about the economy and the market impact of PM Modi's US visit at 2 p.m. today with Mr. Nilesh Shah of Kotak Mahindra AMC. So important conversations. There are, of course, a clutch of corporate conversations lined up as well. 1:30, Jupiter Wagons MD Vivek Lohia joins in. Remember, Titagarh Wagons, after rising so much, has risen another 10%, went up another 10% yesterday. So these wagon manufacturers and railway stocks are in focus. We'll try and talk to Vivek Lohia about their plans at 1:30 p.m. Thank you so much for tuning in to the Trade Setup.